If you are sitting there today, retired or staring retirement right in the face, and you are gripped by the fear of inflation eating your hard-earned savings alive, I need you to pause. Take a deep, deep breath. Because you are exactly who the late-night television commercials are targeting when they scream about the sky falling and tell you to put all your money into a gold IRA. They prey on your fear. They play on your vulnerability. And they look at you and say, look at what would have happened if you just bought gold 10 years ago. Well, today, we are going to look at the cold, hard, undeniable truth. We are going to answer the exact question, what if you had taken $1,000 of your precious retirement money and put it into a gold IRA exactly 10 years ago? Let's do the math together, because the math does not lie, and the truth will set your financial future free. 10 years ago, in the summer of 2016, a troy ounce of gold was hovering right around $1,350. Fast forward to today, in 2026, and gold has had a massive, historic run, sitting at an all-time high of over $4,100 an ounce. On paper, that looks spectacular, doesn't it? It looks like your $1,000 would have more than tripled. You're thinking, Susie, that's a 300% return. Why didn't I do that? I missed out. Stop it. Stop it right now. Because what those shiny commercials will never tell you are the hidden, bleeding costs of how a gold IRA actually works. You see, you cannot just buy $1,000 of gold bars and stuff them under your mattress inside an IRA. The IRS has strict, unyielding rules. To have a gold IRA, you must pay an account setup fee. You must pay an annual administrative custodian fee. And because it is physical gold, you must pay an annual storage fee to a secure, IRS-approved depository to hold that gold for you. Do you know what those fees look like? Usually, it's about $50 to $150 just to open the account, and then anywhere from $150 to $300 every single year for management and storage. Now use your common sense. If you invested $1,000 10 years ago, and your custodian charges you a flat fee of $200 a year to hold it, within 5 years, your fees have completely wiped out your original $1,000 investment. The fees ate your house down. You would actually owe money just to keep that account alive. Physical gold IRAs are structured with flat annual fees, which means they are absolutely toxic for small investments. To even begin to make a gold IRA cost-effective, you have to invest $50,000, $100,000, or more just so the annual fees don't drain your account dry. But let's play devil's advocate. Let's say you didn't just invest $1,000. Let's say you invested a massive chunk of your retirement, and you managed to avoid getting eaten alive by those fees. How did gold really do compared to the regular old stock market? Over the last 10 years, gold has given investors a tremendous return, roughly 13% to 14% annualized because of recent global chaos. It kept pace with, and at times slightly beat, the S&P 500 over this specific decade. But look at the bigger picture. Gold is what I call a dead asset. It does not produce anything. If you own an ounce of gold today, 10 years from now, you still just have that exact same ounce of gold. It does not pay you a monthly dividend. It does not generate earnings. It does not innovate. It just sits there in a vault, costing you money, waiting and hoping that someone else will pay more for it down the line. When you are in retirement, or years away from it, what do you need more than anything else? You need cash flow. You need security. You need assets that pay you to own them. The fear you are feeling about the stock market crashing or the US dollar losing value is a real, valid emotion. I acknowledge that. It is terrifying to watch the headlines. But reacting to fear by shifting your nest egg into a complicated, high-fee, a liquid asset like a gold IRA is a financial disaster waiting to happen. If you ever need your money in an emergency, you cannot just click a button and sell physical gold instantly without taking a massive haircut on the price. The spread, the difference between what you buy gold for and what the dealer will buy it back from you for, can strip away another 5% to 10% of your wealth the second you try to cash out. So what is your actionable takeaway today? If you want protection, if you want peace of mind, and if you want a little bit of gold in your life to sleep better at night, you do not need a gold IRA. If you want exposure to gold, you can buy a low-cost gold ETF, an exchange-traded fund, inside your standard, traditional, or Roth IRA. It takes 2 seconds to buy, has 0 storage fees, 0 setup fees, and you can liquidate it for cash the exact moment you need it. Keep your retirement money safe, keep it simple, and keep it where it can grow and serve you. Do not let fear-mongering commercials dictate your financial freedom. You are too smart for that, and you have worked way too hard for your money to let fees steal it away.